Warren Buffett is one of the greatest investors in history. His name has come to be linked to long-term success, accumulating money, and a distinct style of investing that has motivated countless people all over the world. But how did he do it? Welcome to Financial Literacy. Here, we are dedicated and passionate about bringing you nothing but honest and straightforward facts about your money. We will help you take control of your finances and get you to the next level. Beginners or experienced, this is your one-stop shop for all things financial literacy. In this video, we are diving down into Warren Buffett's 7 rules to reach financial triumph. These 7 rules have not only stood the test of time, but have also helped countless individuals pave their way to financial success. Whether you're just starting your financial journey or you're a seasoned investor, these rules are like gold nuggets of financial guidance. So, without further ado, let's start with rule number 1. Invest in what you understand. Most people make the mistake of investing in things they know absolutely nothing about. They follow the herd and jump on the latest bandwagon without any understanding of what they're getting into. It's like going on a blind date without even knowing the person's name. Risky move. But not Warren Buffett. Oh no, he's way smarter than that. He believes in sticking to what you know, and boy, has it paid off for him. He invests in companies that he can wrap his head around, ones that he truly understands inside out. If you invest in a company, you should understand how it generates revenue, what distinguishes it from competitors, and what the company's prospects are for the future. It's like going on a date with a longtime friend. Knowing all of their characteristics will make it simpler for you to judge whether they are a suitable fit for you. Investing is similar. Warren Buffett did not become a multi-billionaire by carelessly spitting his cash at every attractive prospect that crossed his path. He researched the businesses he was interested in, completed his due diligence, and held off on investing until he had a firm grasp of their business concepts. But hey, remember, building wealth takes time and patience. Don't expect it to be sipping margaritas on a private yacht overnight. Stay focused, keep learning, and let your investments work their magic. Your future self will thank you for it. Rule number 2. Don't try to time the market. Market timing is a popular pastime for individuals with psychic powers and crystal balls. Yet it's an endeavor loaded with uncertainty for the rest of us. This fact is one that Warren Buffett is all too aware of. Dear friends, let's get right to the point. If you want to succeed financially, don't waste your time and energy trying to predict the fluctuations of the market. Why, you ask? Well, let me break it down for you. Firstly, the market is about as predictable as the weather during a tornado. You may think you have it all figured out, but then a storm rolls in and everything goes haywire. A crystal-clear crystal ball and steely nerves are needed to try to time the market, which brings us to our second point. You'll discover that you're on edge all the time, nervously observing every market blip like it's your favorite TV show. If you want to binge watch something, there are far better options than watching the ticker tape of the stock market. Rule number 3. Be fearful when others are greedy and greedy when others are fearful. Understanding the stock market's irrationality is the core of Warren Buffett's 3rd rule for achieving financial success. He advises being scared when others are greedy and greedy when others are fearful. It seems incongruous, doesn't it? In simpler terms, it is a good idea to exercise caution when the market is experiencing a bull run. Avoid following the crowd's lead and making rash investment choices. Just because everyone is purchasing a stock doesn't necessarily indicate that it is a wise purchase. Step back and give the situation a careful look. Think to yourself, am I getting sucked into the frenzy, or is this the right time to enter the market? On the flip side, when everyone else is panicking and selling their stocks, that's when you should consider being a little greedy. This is the time to spot opportunities and scoop up quality stocks at discounted prices. History has shown that the stock market is cyclical, and downturns often present fantastic buying opportunities. It's like grabbing a designer handbag at a Black Friday sale. You're getting a deal that others missed out on. Rule number 4. Be patient and think long term. Warren Buffett is a legend when it comes to investing, and his success can be attributed to following certain rules. One of these rules is to be patient and think long term. In a world where instant gratification is the norm, Buffett's approach may seem a bit old-fashioned, but it has paid off for him. One important thing to keep in mind is that successful investments take time to show results. Generating consistent and long-lasting progress is more important than generating a quick buck. Buffett is a firm believer in performing a thorough analysis of businesses before making a long-term investment. Short-term market swings or the promise of quick gains do not influence him, and so neither should you. Being patient also means not getting caught up in the frenzy of buying and selling stocks based on market trends. Buffett once said, "The stock market is a device for transferring money from the impatient to the patient." By staying calm and focusing on the long game, Buffett has been able to weather market downturns and come out ahead. Rule number 5. Focus on quality companies. Warren Buffett highlights the value of concentrating on high-caliber businesses when it comes to investing. Those companies that are good at what they do, you know. Never mind those shady startups or fly-by-night businesses. We're talking about businesses with a proven track record, a strategic edge, and a robust business plan. Buffett suggests putting your money in businesses that you understand and can confidently analyze. Don't just jump on the latest bandwagon or buy into the hype. Take your time to research and evaluate the company's financials, management team, and industry position. By focusing on quality, you can increase the likelihood of long-term success and minimize the risks associated with investing in lesser-known or unpredictable companies. Think Coca-Cola or Procter & Gamble, not your cousin's cryptocurrency startup or the trendy tech company everyone is buzzing about. Now, let's move on to rule number 6. Be wary of debt. Trust me, you don't want to get caught up in that mess. Debt. The magical land where you get to spend money you don't have. Sounds like a dream come true, right? Well, not exactly. Warren Buffett, the wise wizard of the financial world, has a little something to say about debt. Be wary of it. And by wary, he means run in the opposite direction like you're being chased by a herd of stampeding rhinos. Why, you ask? Because debt is like that charming ex who makes you promise the world but abandons you to wallow in regret. Although it could temporarily make you feel good, the results could be disastrous. Buffett cautions us against taking on debt because it can make our financial situations worse than they already are. Your options are constrained and your independence is lost when you are bound by debt. Believe me, that ideal getaway you've been daydreaming about will become a far-off mirage due to debt. So instead of falling into the trap of debt, save up and buy things with the money you have. It may require a little patience and a bit of delayed gratification, but the peace of mind and financial stability you will gain will be worth it. Plus, you won't have to suffer the heart palpitations that come with opening your credit card statement every month. Lastly, rule number 7, keep learning and stay curious. Warren Buffett is not just known for his financial success, but also for his insatiable appetite for knowledge. He believes that continuous learning is the key to success in any field, especially in the world of finance. So how does this exactly work? Firstly, Buffett emphasizes the importance of reading extensively. He devotes a significant amount of his time to reading books, newspapers, and reports. By staying well informed, he can make more educated and informed investment decisions. So if you want to succeed financially, start reading. Secondly, Buffett encourages individuals to embrace curiosity. A curious mind leads to exploration and discovery. By constantly asking questions and seeking answers, we expand our knowledge and gain new insights. Curiosity also helps us adapt to changing market trends and identify new investment opportunities. Third, Buffett warns against being complacent. Because of the rapid change in the financial industry, what is effective now might not be so tomorrow. As a result, it's imperative to keep current and adjust to new tactics and technologies. Keep pushing yourself to study and develop. Don't take your success for granted. Also, Buffett emphasizes the importance of constant development. He believes in the idea that mistakes should be learned from and applied to future judgments. The attitude of continuous development is what distinguishes successful investors from the rest. Well then, there you have it. These 7 rules are not to be taken lightly. They are the guiding principles that have steered Warren Buffett through the turbulent waters of finance, and they can serve as your North Star on your journey toward financial triumph. Remember, it's not about quick wins or overnight success. It's about cultivating patience, discipline, and a long-term vision for your financial future. So embrace these rules, make them a part of your financial DNA, and watch how they can transform your approach to wealth building. Thank you for watching. If you like this video, please don't forget to give a thumbs up, comment, and hit that notification bell so you don't miss out on our following videos.